In this lesson, we're going to talk about fundamental analysis. Fundamental analysis is a research method that uses economic data and a company's financial statements to help determine an intrinsic value for the stock. Essentially, it means looking at anything that's fundamental to the company. So when we analyze stocks, fundamentals essentially mean anything that is not technical analysis. So for example, if you're looking at a stock, you want to look at the fundamental things that make the stock tick, not the price action. Basically, that means if we look at the left side of this, looking at the year. See where it says year under September? That's the year 2006. And to the right, it says earnings per share, price per share, low and high. So that's the high and the low of the year. These are fundamental factors. What did the stock do as a high? What was its low? What's its earnings per share is more of a fundamental factor than those prices. We'll talk about that again in technical analysis. Going down 2007, 8, 9, 10, 11, 12, 13, and expected for 14 and 13. You can look at those numbers growing by and large from in 2008, $6.78 to $9.08 the next year to $15.15 to $27.68 to $44.15. A little bit of setback this year in 2013, and then in 2014 it went to $42.99. What does that mean? Well, it means that that's what the company is doing with your money. When you invest and you buy a share of stock, they invest that money and they make a profit on it. And that profit happens to be, in 2013, happens to be $39.33. And so when you spend $483 today to buy a share of stock, you essentially would get back $39.33 if you wanted to look at it that way. There's another way that we like to take a look at. It's called return on equity. And that number is over to the right there of that earnings per share box. If you look at the next box to the right, you'll see 6 different things. Earnings per share growth rate. So that's how fast that box on the left that we just talked about is growing. Those earnings are growing by and large about 59%. The earnings stability, which is how stable are those earnings? Are they pretty predictable? And the lower the number, the better. It's 14. Not bad. The PE ratio, we'll talk about that in a second. But if you go down 2 more categories, you'll find return on equity. Return on equity is 43% on Apple. And what that means is if you give them $1, they're going to give you back $1.43 in theory for the use of your money. So they do a pretty good job managing your money. If you put your money in a CD, they're going to give you back, about 1% these days. But if you give your money to Apple, they're going to give you back 43% on average in theory. Now, it's an equity, so that you don't really get that money back. You hopefully get that money back in the growth of a stock and how well it does and performs. Looking back over to the left now, you'll see something called yield. Yield is essentially how much money they pay in a dividend as a percentage of the stock price. So they pay 2.5% if you bought it today at $483.03. 2.5%. They actually give you a check for that every year, 2.5%, whatever that turns out to be. That's a pretty important factor if you're looking for income. As a growth investor, though, we don't want you to ever invest in a stock just because of its yield. Because if the stock goes down 2.5%, you blew the whole yield for that entire year. You see what I mean? Apple stock can move 2.5% in a day. If it goes down 2.5% in a day, who cares if you get 2.5% a year? You're not getting any money. Looking down below, there's a couple other things. One is book value. That's essentially if you had to sell the company today, how much per share is the company worth? What's its book value? All of these other things below, the earnings per share, the change, those are quarterly if you look down at the left-hand side. Looking up to the right, here are some things that I like to key on. Now, this is a service from MarketSmith, which is an Investor's Business Daily product. We like to look at certain things that are fundamental that make a company tick, but you can't analyze everything. There's so many things fundamental and analyze that we want to boil it down into some of those things that seem to be true for a lot of the stocks that are succeeding. There's an accumulation distribution rating. This is how much is being bought versus how much is being sold. Well, it's a B, so it's getting a B. That's not bad. A is the best mark you can get. SMR, sales, margins, and ratios, pretty good. Composite rating. This is Investors Business Daily taking it all together and coming up with something called a composite rating, and they give Apple a 54. Now, the best rating you can get is a 99, so it's a long way from that. Timeliness rating is a C. It could go either way as far as timing. It's been correcting for a long time, so it may not be the best time to buy, but It's probably not the worst either. And the sponsorship rating is how well are the mutual funds doing that happen to be investing in it, and they're doing okay. We like those factors right underneath that are more statistical. Those are also fundamental. Earnings per share growth rate at 59. Return on equity is a big, big thing for us, 43%. And then cash flow, you'll see they make $47.92 for every share in cash flow. So any of these factors can be considered fundamental, but what else can be considered fundamental? Well, what they do in their industry is fundamental. Apple makes personal computers, mobile communication devices, and portable digital music players. They also sell iTunes, they sell cloud services, they sell lots of different things that, are not in that quick little fundamental description. What else is a fundamental thing with Apple? Well, Steve Jobs was a big fundamental factor of Apple. In fact, he was the inspiration that made Apple come back from the doldrums, and he brought that stock back up to the glory that it was. And then when he died, that stock started to not perform, as you'll see from looking at a technical analysis chart. That stock basically lost 30%. And that's an important thing to remember. What is management? What are the directors like? How do they treat themselves? How do they treat the shareholders? How do they treat the employees? And these are fundamental factors that you kind of have to figure out along the way. And all of these pieces fit together to make a big picture for the company. Now, if you look at one dot on any kind of a pixel screen, you're not going to get the picture. But when you put all those dots together, thousands of megapixels, dots, all of a sudden you start to get a picture. And that's what fundamental analysis does. It allows you to start to paint a picture of where you think the company is going. And then once you get that picture, now it's time to go and do some technical analysis. Look at the chart and see what the emotion behind the buying and the selling is doing to the price. So that's it for fundamental analysis. There's a lot to learn with fundamental analysis, and almost everything can be fundamental if it doesn't have to do with the stock price and the volume. And that's what we think is equally important, if not more important, as fundamental analysis.